Hello students, good evening to all of you. So students, the first and the foremost thing today that we are going to start would be on this, the taxation of dividends, alternate tax regime thereafter, and finally settling down with the MAT. Very quickly first, let's look upon to this, the dividend taxation, students. Now these are important particular provisions which are there for your upcoming examination. The first particular point is about the concept of deemed dividend, students. So I'll try to break it down, this dividend, students. Whenever you have to revise this dividend taxation, please break it down into two parts. The first part in the dividend taxation has to be the concept of deemed dividend and the special rate of tax applicable, if any, which is 115 BBD. The second part is about the latest amendments which are being there of the Finance Act 2020. So that Finance Act 2020 latest amendment is the second particular coverage that we will discuss it in this regard. So the first one, let's look upon to that in this context, is about the deemed dividend concept. Here students, in the case of deemed dividend, there would be some important aspect which can be targeted in the examination. I'm going to cover up that first. So if you can have a look over here, you find deemed dividend from 222A to 222E. Now students, dividend of 222A to 222E, first and foremost is always keep in mind to deal with the dividend of 222A to 222D first, from A to D, and thereafter you go to the next one, which is the last one, which is a 222E dividend. So far as 222A to 222D is concerned, let's have a look to the first one. The first one says about the distribution of the asset of the company to its shareholders. Now this can be as simple as, students, a normal particular asset which has been distributed to the shareholder, which can be also in the form of a cash, which means that the normal dividend payout, as we all know, interim dividend, final dividend, they all can get covered in this section 222A. The normal dividend in this context, like say for example, the dividend which is like in the form of interim dividend, final dividend, they can be covered in this particular context. This is what 222A dividend is all about. Thereafter we have this 222B dividend. Now this is an important one. So supposingly if the company wants to distribute, like for example they are distributing their own debentures or they are distributing their own debenture stock to the shareholder. So distribution of their own debenture or distribution of the debenture stock to any shareholder. Now this shareholder, students, can be equity shareholder or the preference shareholders. This shareholder can be either the equity or it can be a preference shareholder. In both the cases, students, it will be considered as a deemed dividend, and accordingly this deemed dividend would be considered under 222B. Now by the way, I think all of you are aware, earlier the company used to pay the dividend distribution tax on the dividend so distributed, but now these dividend will be chargeable in the hands of the shareholder under their IFOs. These dividends are now going to be charged in the hands of the shareholder under their IFOs. That is what your 222B dividend is all about. Okay. Now the second part of 222B dividend is more critical, because now this is talking about the bonus shares which are being given by the company, its own bonus shares. So company's own bonus shares given by the company to whom? So the company's own bonus shares has been given by the company to its preference shareholder, students. So if the company is giving its own bonus shares to its preference shareholder, then even that is considered as a deemed dividend under section 222B. That is considered as a deemed dividend under section 222B, students. So that is a dividend of 222B, which has been there in this context. Fine. And thereafter, what about the case wherein the bonus has been given to the equity shareholder? Whether that would be considered as a deemed dividend of 222B? And the answer is no. The bonus which you give it to the equity shareholder is perfectly fine. There is absolutely no eyebrows which get raised if a bonus has been given to the equity shareholder, because obviously the equity shareholder primarily bears the ultimate risk, and accordingly it is justifiable on the part of the company to issue its bonus share to the equity shareholder. But when a bonus share has been issued to the preference shareholder, then that is where the problem will arise. And accordingly, in this particular case, bonus shares being given, the company issuing its own bonus shares to its preference shareholder, then that will be considered as a deemed dividend under section 222B. Now 222C, students, is an important one. By the way, as I have told you, students, that 222A to 222D dividend, the dividend of 222A to 222D has to be considered separately in this case. The reason is very clear. If you can have a look over here itself, you will come to know. Students, have a look in this context that when you talk about 222A to 222D dividend, it becomes very clear that this dividend is the amount that has been distributed is restricted to the extent of the accumulated profits of the company, whether it is capitalized or not. The dividend which has been distributed from 222A to 222D is restricted to the extent of the accumulated profit of the company, whether it is capitalized or not. What do you mean by capitalization of a profit? In this context, any idea of that? The capitalization of profit, students. So the capitalization of profit, students, as you may be aware of it, that whenever you issue a bonus shares, students, what is the journal entry that you pass? Whenever you issue the bonus shares, what is general entry that you pass? You pass a general entry of reserves and surplus account debit to equity share capital. To equity share capital. So therefore, is this a capitalization of profit? Yes. So in the question, if at all they will give it to you, the data of equity share capital, and in the bracket they can say that out of the above rupees, say for example 5 lakhs is a bonus shares which is issued. Out of the above, rupees 5 lakhs is a bonus shares which is issued. So while you compute the accumulated profit for the purpose of considering the amount of dividend under section 222A to 222D, while you consider the accumulated profit, then in that case such bonus share which is issued, even that will be considered as a part of your accumulated profit. Even that will be considered as a part of your accumulated profit. Student, this is a point that you should be very careful about it. Okay, so this is true for the dividend which you have distributed from 222A to 222D. That is a point. And the last but not the least is 222D dividend, which talks about what? Distribution by a company made to its shareholder on reduction of its capital. Now this is a very peculiar thing, isn't it? On reduction of its capital, students. So distribution by a company made, Gayatri, distribution by a company made to its shareholder on its reduction of its capital. Now students, we all know we have done internal reconstruction in intermediate. In that we all are aware that whenever a capital is reduced, it is generally reduced for the purpose of writing off the accumulated losses of the company. Whenever the capital is reduced, it is reduced for the purpose of students. For the purpose of students in this context, writing off the accumulated profit of the company. We haven't seen anything of like where a capital being issued, and on that the capital being reduced, and on this reduction the shareholder are distributed the proportionate amount. The shareholders are distributed the proportionate amount. So that is something, students, we haven't encountered it at all. That is something that, students, we haven't encountered it at all. So students, it is very obvious in this regard that the distribution by a company made to its shareholder on reduction of its capital, students. So whenever an attempt is made by the company that when it reduces its share capital, it wants to pay out to its shareholder the proportionate amount, then such payout, students, will also be considered. Such payout will also be considered as a part of your deemed dividend under 222D. Now here there is some exclusion which is very critical, students, over here. Now even a redemption of a preference shares, or buyback of an equity shares, when you do a buyback of an equity shares, even that leads to what? A reduction of share capital, and on which the company makes the payment of money to the shareholder. So can we therefore say that it could be considered as a case for, can therefore we say that this could also be considered as a case of a deemed dividend of section 222D? Can that also be considered as a deemed dividend under section 222D? To that the answer is no. Why? Because there is an exclusion to the dividend. There is an exclusion to the definition of dividend, and in that exclusion very clearly they have said that payment made on account of redemption of preference shares, payment which is made on account of the redemption of preference shares, that shall not be considered as a deemed dividend, students. That shall not be considered as a deemed dividend. Similarly, for point number 3, you can see the buyback of equity shares, students. The buyback of equity shares which is done, even such buyback, on that if you make a payout, on that buyback if you do a payout, then such payout also will not be considered. Such payout will also not be considered as a case of a deemed dividend under section 222D. Deemed dividend under section 222D. Is that clear? So 2 things, students. 2, payout is not to be considered as a deemed dividend under 222D. One is the payout on account of the redemption of preference shares, and another is a payout on account of the buyback of the equity share, even if in both the cases it results into what, students? It results into the reduction of the share capital. I hope that all of you are clear with this one now. Now the most important and expected question is 222C for your examination. One of the most expected questions, students, would be the reduction of the share, the 222C dividend. First, let's read this one out and I will do a case study, students. You will copy it on this case study and do revise even on the day of the examination this particular case study, because in all probability this is the most expected question in your exam. And that is of, when you see 222C, distribution by a company made to its shareholder on liquidation. So if the company distribute any money or even an asset, doesn't matter. So any distribution which the company does to its shareholder at the time of its liquidation, then such distribution are also considered as a deemed dividend under section 222C. Such distribution is also considered as a deemed dividend under section 222C. So let's have a look over here, students, on liquidation of a company. Students, you need to copy it on this one, students. A case study. Liquidation of a company. So in respect of a liquidation of company, students, let's see the taxation of dividend and the taxation of the capital gains. We'll discuss from the perspective of what will happen in the case of a company and what will happen in the case of a shareholder. Let's take a particular shareholder, Mr. X. The case study of Mr. X, who is say 10% shareholder of the company. Who is say 10% shareholder of the company. Now supposingly on liquidation, the money and the fair market value of the asset distributed to, say for example, this is rupees 10 lakhs, rupees 20 lakhs. Okay. Accumulated profit of the company including the capitalized amount is say rupees 8 lakhs. Accumulated profit of the company including the capitalized amount says rupees 8 lakhs. Okay, so definitely, friends, how much is the deemed dividend? Restricted to accumulated profit. So deemed dividend under section 222C would be considered as rupees 8 lakhs, restricted to the accumulated profit of the company. Now students, obviously this is what will be distributed. Now this 10% comes to rupees 2 lakhs. Out of that, students, how much is the deemed dividend in this context? So the deemed dividend under section 222D is rupees 80,000. Is rupees 80,000. although the amount distributed will be 2 lakhs to Mr. X being a 10% shareholder, but the deemed dividend out of it under section 222D would be restricted to rupees 80,000. All of you will agree to this one, isn't it? Now this deemed dividend, students, will be taxable under the IFOs. Under the IFOs, whether the company which is distributing this deemed dividend, will they be liable to deduct TDS under section 194? Whether TDS under section 194, will that be required to be deducted? And the answer is yes. Abhijit, the TDS under section 194 will be required to be deducted on this rupees 8 lakhs which has been distributed. Definitely it is more than 5,000 in my example. So definitely in this case TDS under 194 will be required to be deducted. So this is a case study students, as far as the dividend taxation is concerned. Dividend, again I am repeating, is going to be taxed only in the hands of the shareholder. Earlier there was a DDT concept, now it is in the hands of the shareholder. Now students, there is a capital gains implication as well. That needs to be considered over here. Be careful now. And what is this capital gain implication? Let's have a look to the CG implication. Now what is the CG implication over here? Students, the first and the... Okay, Abhijit. Very good. So the first and the foremost thing, I think this part of CG may not be there for your intermediate. I'm not aware of it. Nevertheless. So CG, students, there is a section 46(1), which gives the exemption of capital gains in the hands of the company. Please understand, the company are transferring their asset. There is a physical transfer of the asset if that take place, wherein the company transfer its asset to its shareholder. Then as per 46 subsection 1, it says that the capital asset so transferred will not be considered as a taxable transfer. So accordingly, students, in this case 46(1) says what? The distribution of its asset by the company directly to its shareholder is not considered as a taxable transfer. Distribution of its asset by the company directly to its shareholder is not considered as a taxable transfer. This is what section 46 subsection 1 is all about. Fine. Now students, be careful. But what if the company is first selling that asset in the market and the sale proceed is what is distributed to the shareholder? Then whether the capital gains, will it be taxable in the hands of the company? And the answer is yes. So if the company is selling that its asset directly in the market and the sale proceed arising on such transfer is what is distributed to the shareholder, then we will say, students, that this will now be taxable in the hands of the company. This is what will be taxable in the hands of the company. So therefore just be careful. Asset directly to its shareholder. This is very important. Now from the shareholder perspective, students, here please be careful. For the shareholder perspective, there is a provision of section 46(2). Now students, what happens in the case of it? In the case of the liquidation, students, we can say even the shareholder was holding the capital asset. Namely the shares of the company. Now that particular shares of the company on the liquidation, there would be an extinguishment of its right. There would be an extinguishment of the right. So in a way, we can say that even the shareholder right gets extinguished, and therefore there is a transfer on the part of the shareholder as well. The fact that the right of the shareholder on the liquidation of the company extinguishes, we can say that in that case even the shareholder has transferred what, students? Has transferred a capital asset, although technically it is incorrect, but still for the purpose of understanding that the shareholder has also transferred its asset, namely the shares of the company, on the liquidation. So therefore the capital gains will also emerge. Now in that case, if you see over here, we will have to then calculate the capital gains on such transfer by the shareholder of its shares at the time of the liquidation of the company. So therefore, how the capital gains will be computed on the transfer of such shares? This is how it would be. So the money or the asset received, money and the fair market value of the asset received by the company, that is what would be considered, students. And the amount in this case is 2 lakhs. But out of this 2 lakhs of the amount, you cannot tax the entire 2 lakhs of the amount. And why is it that you cannot tax the entire 2 lakhs of the amount? Because out of this rupees 2 lakhs, some portion of the amount, students, constitute a deemed dividend. What is a deemed dividend on this rupees 2 lakhs? So this out of some portion. So therefore less deemed dividend which is already taxed under section 222C, which is already taxed. Under the head IFOs. So how much is the amount out of this? 50,000 is already taxed under the head IFOs. So therefore balance 1.2 lakhs is the full value of consideration under section 46(2). So the balance 1.2 lakhs would be considered to be a full value of consideration under section 46(2). Now from this full value of consideration, you reduce the cost of acquisition of the shares. So say for example the cost of acquisition, or maybe the index cost of acquisition if the period of holding is over a particular point. So therefore this can be considered to be the capital gains, which is how much? Rupees 80,000. So therefore students, always keep in mind this particular proposition on the liquidation of the company. It is not only the dividend taxation that needs to be considered on the liquidation of the company. You need to also look upon the impact or the implication of the capital gains taxation, and that is what I say, a very comprehensive analysis. So this is a comprehensive analysis, students, which I have given it to all of you now. All of you are clear with this one, students, in this context. So students, now we proceed further. So we have dealt with this. With that, now we come to 222E. Now this is also an important one, students. So the two section which I expect in your examination is 222C or 222E from the deemed dividend point of view. And that is the reason why they are very important. Now 222E talks about a loans and advances which has been given by the company to its shareholder. So what is that? Here a closely held company primarily giving loans and advances primarily to a shareholder who is holding. So this is directly a loans and advance which has been given by the company to its shareholder, which shareholder who holds not less than 10% of the voting power of the company as on the date when such loans and advances are being made. So the minimum threshold or the criteria happens to be 10% of the voting power of the company as on the date when such loans or advances has been given. So if supposingly the closely held company is giving the loan and advances to the shareholder, be careful students now here. You have to be extremely careful. I'll give you one example which the ICI has tried to target in one of the attempt. Let me give you an example here. Supposingly I was a 5% 5% shareholder in that private company as on the first day of the previous year. I was a 5% shareholder of the company as on the first day of the previous year. So say for example, students, as on the first day of the previous year, which is 1st April 2021, 1st April 2021, I was having 5% of the voting power in that private limited company. In the month of May 2021, the company is giving me a loans and advances. In the month of May 2021, the company is giving me a loans and advances. And in the month of July 2021, I am increasing my stake in that company from 5% to 12%. I am increasing my stake from 5% to 12%. Question therefore is, the loans and advance which the company has given to me in the month of May 2021, the loans and advance which the company has given to me in the month of May 2021, will that result into a deemed dividend under section 222E taxable in my hands? Will that result into a deemed dividend under section 222E taxable in my hands? And the answer is, students, no. That will not result into a deemed dividend under section 222E taxable in my hands, because as on the date of giving the loans and advances, was it that I was holding 10% or more of the voting power in that company? As on the date of giving the loans and advances, was it that I was holding more than 10% of the voting power in that company? And the answer is no. So what you need to be very careful in 222E, very importantly, students, you need to be very careful that as on the date of giving the loan, I as a shareholder should be holding 10% or above voting power in that company. 10% or above voting power in that company, only then that provision of 222E will be applicable. Now, this is one particular catch point of 222E, which you have to be very careful about it. The second catch point of this one is that, students, can you see this one? So far as 222A to 222D, the dividend which is restricted to the accumulated profit of the company, that accumulated profit will be considered inclusive of the capitalized portion of the profit. That accumulated profit for the purpose of determining the deemed dividend under section 222A to 222D, will it be restricted up to the accumulated profit, whether capitalized or not? Yes. But when it comes to the deemed dividend of 222E, the capitalized portion of the profit will not form part of the accumulated profit of the company. The capitalized portion of the profit will not form part of the accumulated profit of the company. This is for 222E. So therefore, in one of the attempts, they were trying to instigate the students by giving this information for 222E question, that in the equity share capital, rupees 3 lakhs constitute bonus shares, which implies nothing but a capitalized profit. So are you going to consider it while determining the accumulated profit for the purpose of the dividend calculation of 222E? Answer is no. You will completely ignore this particular data, but this data would be relevant had the question would be of calculating the deemed dividend for 222A to 222D. That data would be relevant then. Now, therefore, students, the first case, as I was telling to all of you, the first case is the case where the company has directly giving the loans and advances to the company, to the shareholder. Which shareholder? The shareholder who, as on the date of giving such loan, should be holding minimum 10% of voting power in that company. Minimum 10% of the voting power in that company. That is point number one. However, instead of giving that loans and advances directly to the company, what they can also do is that they can give this loans and advance to a concern. They can give the loans and advance to a concern in which such shareholder, is having a substantial interest at any point of time during the previous year. Now, this is very interesting. So therefore, say for example, students, I am a shareholder of the company holding 12% of the voting power in that company. I am the shareholder of that company holding 12% voting power in that private company or a closely held company. The closely held company, what it does is that it is giving a loans and advances to a partnership firm. Okay. Now in that partnership firm, at the time of giving the loans and advance, I was having 10% of profit share. I was having 10% of the profit share. So at the time of giving the loans and advances to that particular partnership firm, I was having 10% of the profit share in that partnership firm. However, by the end of that previous year, my profit share in that partnership firm has increased to 25%. My profit share in that partnership firm has increased to 25%. So therefore, the question to all of you would be whether the deemed dividend of section 222E, will it be applicable in my hands, that is in the hands of the shareholder in this particular example? To that the answer is indeed yes, students. Yes, it will be applicable, students. To that the answer indeed will be yes, because the reason is that such shareholder, what do you mean by such shareholder? The shareholder which is holding at least 10% of the voting power of the company. So such shareholder can have the substantial interest in that concern at any point of time during the previous year. Such shareholder can have a substantial interest in that particular concern at any point of time during the previous year. This is what needs to be considered. So students, over here if you all see, to any concern in which such shareholder is a member or a partner and has a substantial interest which is 20% or above at any time during the previous year. That is the point. So therefore, if the loan has been given to this concern, even in that case, the deemed dividend of 222E, will it be applicable in the hands of the shareholder? And the answer is yes. Which shareholder? The shareholder holding 10% or more of the voting power in that particular company as on the date of giving the loan, and holding at least 20% of its share in that concern at any point of time during the previous year, not necessarily at the time of giving the loan. But always be careful, at the time of giving the loan, this particular shareholder should be holding at least 10% of the voting power in that company. I hope that every one of you are clear with this one. And the third one, students, is this case where that the closely held company is giving a loans and advances to a person on behalf of such shareholder. So even in that particular case, the deemed dividend of 222E would be applicable in the hands of the shareholder. In the hands of the shareholder, and that exactly is the point. That exactly is the point. Now students, please be very careful of the fact that even if the loan is a genuine loan, 222E will be applicable. What does it imply? It implies this, that supposingly a loan has been given primarily and the shareholder is repaying that loan along with interest. Still, at the time of giving of the loan, deemed dividend of 222E will be applicable. The deemed dividend of 222E will be applicable irrespective of the fact that subsequently this loan amount has been repaid by the shareholder to the company. That is point number one. And point number two, students, is that, be careful, point number two over here is this, that in the case of advances, students, in the case of advances, if the advance is in the nature of a trade advances, if the advance is in the nature of what? In the nature of trade advances or commercial advances, then in that case, so for example, I am a shareholder in that company and the company has appointed me to undertake a works contract, students, a works contract in that particular company, for which it is giving me the advances, So therefore, in that case, will the company deduct TDS under section 194? Will they deduct TDS under 194 or 194C? This is the kind of a question you can expect. So the company will not deduct TDS under section 194, For the reason being, this is not in the nature. A trade advance given to the shareholder will not be considered to be a case of a deemed dividend of 222E. So therefore, the TDS under 194 will not be applicable. But the fact that the consideration is paid on account of works contract, therefore the company at the time of paying this consideration amount, although in the form of an advance, at the time of payment, the company will be required to deduct the TDS under section 194C. Under section 194C. This is a kind of the question, students. Are you getting it? How the question will be targeted in the exam? So that is all about the deemed dividend we have discussed. The second particular point is, students, is about the special rate of tax. Be careful, students. Up till last year, students, there was some special rate of tax on 222E dividend. Are you aware of that? Up till last year, students, there was some special rate of tax on the 222E dividend, was 34.94%. But today, there is no special rate of tax applicable on this particular deemed dividend of 222A to 222E. So the shareholder in whose hands this dividend will be taxable, the shareholder in whose hands this dividend will be taxable, this dividend will be taxable as per the rate applicable to this person. The normal rate as per the Finance Act. The normal rate as per the Finance Act. So students, there is no special rate which is now applicable for the dividend which is distributed under 222A to 222E. The applicable rate that will be considered for the purpose of taxability in the hands of the recipient shareholder will be the rate applicable as per the Finance Act. The rate which is applicable as per the Finance Act. Now coming to this second point, which is very critical, and what is that, students? The special rate of tax in the hands of the dividend income. The special rate of tax in the hands of the dividend income. Now there is only one case is there wherein the dividend is taxed on special rate, which is in section 115 BBD. Now as far as 115 BBD, students, is concerned, a Indian holding company getting the dividend from its foreign subsidiary, a domestic company in India getting what, which I use the term Indian holding company, a domestic company in India which I use the term, which is the term which I'm using, the Indian holding company getting the dividend from its foreign subsidiary, then in that particular case the dividend income so received will be taxable. The dividend income so received, students, will it be taxable in the hands of this particular? Will it be taxable in the hands of the company? Yes. Now, what is the rate of tax? 115 BBD provides for a special rate of tax. And the special rate of tax, students, is 15%. Now, what is this definition of foreign subsidiary? The definition of foreign subsidiary is the foreign company in which the domestic company holds at least 26% of the voting power. The foreign company in which the domestic company holds at least 26% of the voting power, that is what is considered as a foreign subsidiary. So if the Indian domestic company, if they are receiving the dividend from its foreign subsidiary, then in that particular case, the dividend so received will be charged at a concessional rate of 15%. Now, whenever there is a special rate of tax, students, whenever there is a special rate of tax, then it goes without saying that there will not be any deduction of an expenditure or loss in the assessment of this for this dividend income. So no deduction of any expenditure or loss shall be allowed against this particular dividend amount while doing the assessment under section 115 BBD. While doing the assessment under section 115 BBD. I hope that all of you are clear with this one. If that is the case, students, we come to one of the most important area, and as you can see, students, is the area, students, which you all are aware. Very important one. Very important one, students. The two sections which are being there over here, 57 and ATM, the recent changes which has taken place. Section 57 and then section ATM. Now these two sections, students, ICAI have used it to its advantage. And expect a comprehensive case study, number one, or expect in the examination question, either you expect a comprehensive case study or you expect a total income question, specifically the alternate tax regime question, in which they will give you some data which has to do with section 57 and section ATM. Now tell me one thing, students. Now 57, as you all are aware, that there is one deduction, the dividend income, which is accessible in the hands of the shareholder. In respect of this dividend income, only one deduction is available. Are you aware of that? In respect of that dividend income, only one deduction is available, and that is if I say I'm an individual, okay, and I have taken a borrowing, I have taken a loan to acquire the shares of this particular company. Then the interest on this particular loan amount will be eligible as deduction. The interest on this loan amount will be eligible for deduction, but the maximum upper limit is given to you. And the upper limit under section 57, students, is how much? 20% of the dividend income. So 20% of the dividend income happens to be the upper limit. 20% of the dividend income happens to be the upper limit. Now then there is also ATM, which is also equally important. Now what is this ATM that they have mentioned? Now this is the case where this deduction, now this 57 is for any shareholder. Be careful, students. This is for any shareholder. Any shareholder. This is for, students, a domestic company. Now be careful, students, here, because there could be a confusion many a times. So there are three special provision which are there. So one I will write 115 BBD and another I will write ATM. 115 BBD and ATM is applicable only for domestic company. Only for domestic company. Whereas section 57, students, is deduction for any shareholder. Is deduction for any shareholder. So this is how the things has to be looked upon in this context, students. Now, okay, keep this observation in mind. So that's the reason why deliberately I gave you the example wherein I have taken a loan. I means the individual has taken a loan for acquiring the shares of a company. Then the dividend income will be accessible in my hands under the IFOs. Now, while it will be accessible in my hands under the IFOs, will tell me one thing. The dividend income in this case, will it be taxable at special rate in my hand? On normal rate. In my hands, it will be taxable as per the normal rate. And if it is going to be taxed as per the normal rate, the interest expenditure, students, will that be allowed as deduction? The interest expenditure, will that be allowed as deduction, students? To that the answer is yes. The interest expenditure, students, will be allowed as deduction in this regard. So this is how it has to be considered in this context. The interest expenditure on the loan which I have taken, will that be allowed as deduction? To that the answer is yes. Fine. Because the dividend is taxable in my hands at the normal rate. But what if, students, be careful now. What if I am a foreign company? Okay, now what if I am a domestic company? And if I am a domestic company and I have taken a loan. Students. I have taken a loan and on that loan, students, be careful. On that loan, primarily, I am incurring interest expenditure. And I am receiving what? Receiving a dividend income from another domestic company. I am receiving a dividend income from another domestic company. So whether that interest expenditure on this loan amount, will that be allowed as deduction? Answer is yes. Why? Because the dividend income again is accessible in my hands as per the normal rate applicable to me. I am a company. So therefore, in that situation, students, the dividend, the expenditure, the interest expenditure under section 57, that deduction would be available to me. However, be careful, students. If I have opted for an alternate tax regime, then this particular interest expenditure will not be allowed as deduction. Students. This is one thing which is very categorical, which is there in 115 BAB. If you remember 115 BAB, alternate tax under 115 BAB, we will show it. We'll do that one, students. May I in fact try to if we have the alternate tax regime, I'll just try to give a quick, let's do a quick peep to this provision in alternate tax regime. This is a very important stage that you all are in. Students, let's have a look. So there are two alternate tax rate. Students, one is 115 BAB, another is 115 BAA. Read this particular part. So what did it say, students? Over here, the rate of tax on the income, on the other income, in respect of which there is no specific rate of tax. In respect of which, students, there is no specific rate of tax. So that is what they have said it in this context. So rate of tax on other income in respect of which no specific rate of tax is provided. So that was the example which I gave it to all of you right now. That is what is the example which I have given it to you right now. That dividend income received by a domestic company, there is no special rate of tax. So whatever is the rate of tax was applicable as per the normal rate. Now, if I have opted for 115 BAB, students, be careful on this one. If I have opted for 115 BAB, then this is the point. Then on this particular income, that is a dividend income, applicable rate would be 22% plus flat 10% plus flat HEC of 4%. So effective rate becomes 25.168%. So the applicable tax rate would be 25.168% if such income has neither been derived from nor is incidental to manufacturing or production of an article. So obviously dividend income is neither income which is derived from manufacturing activity nor we can say that this dividend income is incidental to this manufacturing activity. So neither derived nor incidental. That is what we can say, isn't it? Now what they are saying over here, in respect of such income, no deduction or allowance in respect of any expenditure or allowance shall be allowed in computing such income. No deduction, friends. Be careful. In respect of such income, no deduction or allowance in respect of any expenditure or allowance shall be allowed in computing such income. So therefore, can I say under 57 deduction, if a domestic company which is a manufacturing company and has opted for 115 BAB, if that domestic company has taken a loan for which it has used this loan amount to purchase the shares of another company. Okay, now this dividend income which I am getting it, now can I claim a deduction under section 57 if I have opted for 115 BAB? And the answer is no. I will not be in a position to claim the deduction of section 57 if I have opted for 115 BAB. But what if it is a case of 115 BAA? Then the rate is the same, 25.168%. The rate is the same, 25.168%. But is there any restriction so far as the deduction is concerned? So what is that they have written? There is, however, no restriction regarding claim of any deduction or allowance permissible under the relevant provision of the Act. Which means that if you have opted for 115 BAA, then the deduction is allowed to you. That is the point. That is the point in this context. What if, friends, if you are an individual then? If you are an individual, supposing that is the first example I give it to you, if I am an individual. Now, individual, all of you are aware that there is 115 BAC. Individual, all of you are aware that there is 115 BAC. Now, if I have taken a loan amount, now this is a very important stage you people are in. So, if I have taken a loan amount and that loan amount, students, I am using this loan amount for the purpose of purchase of a shares of another company, and I am getting the dividend income from that company. I am getting a dividend income of that company, and correspondingly there is an interest expenditure. Now, I as an individual have opted for 115 BAC. I as an individual have opted for 115 BAC. So whether there would be any restriction, students, whether there would be any restriction in this case of the deduction of such interest expenditure under section 57. So in 115 BAC there is a restriction. There is a restriction for claiming some deduction under section 57, but that restriction does not extend to the interest expenditure out of a loan which is taken for the purpose of purchase of security. And that is the reason why, students, for 115 BAC case, the deduction of this interest expenditure will be allowed. So students, please take a note of this very important findings, because this is what the ICI does, and this is where you people falter big time. I'm telling you, students, big time you people falter. Are you aware of that? I hope that you all understand the impact of these kind of discussions now. So therefore, students, all of you will take a note of this particular aspect quickly. Please take a note of it. Interest deduction under section 57. In various situations. So individual and HF is a shareholder. So 115 BAC he has taken, or 115 BAC has not been taken. In both the cases, is available. interest deduction in both the cases is available. Second, if the shareholder is a domestic company is a shareholder. Students, this is such an important note because there are so many MCQs and the case studies which are there, and students make so many silly mistakes, and that is the reason why this is the Brahmastra kind of a note for all of you. Brahmastra kind of a note, students. Now for domestic company, there are two particular cases herein, or may I say herein: normal provision, second case, students, is where opted for 115 BAB, opted for 115 BAB. The third case, students, is opted for 115 BAA. Are you getting this one, students? So if it is a normal provision, whether interest deduction under section 57 available, interest deduction under section 57 available. So if the domestic company is a shareholder which has taken the loan and it has opted for a normal provision, then the interest deduction under 57 is available. What about 115 BAB? No deduction of interest expenditure. No deduction of interest expenditure, the dividend income, taxable at 168%, 22 plus 10 plus 4. (25.168%). Deduction. Now third case, friends, if the domestic company which has taken the loan and they have opted for 115 BAA, then whether the deduction of interest expenditure available under 115 BAA situation? Answer is yes. Now let's stretch it out. If you want it to be so comprehensive, I'll make a comprehensive for all of you. Here, dividend from foreign company, accessible under section 115 BBD. If that is the case, if the dividend is received from the foreign company which is accessible under 115 BBD, again, students, what we'll say? No deduction under section 57, and the dividend income taxable at 15%, which is a special rate. 15%, which is a special rate, whether the domestic company has opted for normal provision or alternate tax under section 57. This is a case. Historical notes are getting prepared, students, now for all of you. This is a historical note, students. I hope that all of you appreciate this particular perspective. So, if the domestic company is receiving the dividend from a foreign company, if the domestic company is receiving the dividend from a foreign company, which dividend is accessible under 115 BBD, the dividend which is accessible under 115 BBD, then what is the answer, students? In this context, we say no deduction of one under section 57 would be available, and the dividend income would be taxable at 15%, which is a special rate. Whether the domestic company has opted for normal provision or alternate tax under 115 BAB or 115 BAA. 115 BAB or 115 BAA. I will do it, Bijal. Students, first like the video also. And please don't forget to share the video also, students. I'm scrolling up, students. Have you all written this one now? So what is the discussion right now? The discussion is such an important discussion of MCQ, integrated case study, wherein multiple question of this has been asked. If the shareholder is individual or HUF, and what is that concept that we are doing it? That if that individual and HUF shareholder, if they have opted for alternate tax regime of 115 BAC, or they have not opted for the alternate tax regime of 115 BAC, in both the cases, students, the deduction of section 57 is available against that dividend income received by this individual shareholder. There is no embargo, there is no restriction under 115 BAC that where the shareholder wants to opt for 115 BAC, then whether the interest expenditure under section 57, will that be allowed as deduction? Yes, it will be allowed. No restriction. There are some other restrictions like family pension, the children exemption of 1032. There is other restrictions which are there, but not of interest expenditure. And the next one, friends, is about a domestic company. If a domestic company is a shareholder and they are receiving the dividend income from another company, now the shareholder, the domestic company which is a shareholder, they have taken the loan. To purchase the shares of other company. In that particular case, students, the interest expenditure that they are getting it, that interest expenditure, will that be allowed as deduction? Various situation. Situation number 1. If it is a normal provision. Students, then the interest deduction under section 57 is available. But if they have opted for 115 BAB, be careful, then there is a specific restriction in 115 BAB in respect of other income. 115 BAB says that we will not give any deduction on these other income, and the income will be assessed directly without any deduction of expenditure. The income will be assessed directly at the rate of 25.168%. The next point, students, is 115 BAA. However, if the alternate tax regime is that of 115 BAA, do we have any restriction of that sort? Answer is no. In that scenario, students, the deduction of interest expenditure under 57 is available. And what if the dividend income is earned from a foreign company? Which foreign company? That foreign company in which I hold 26% or above of the voting power. In that case, no deduction under section 57, and the dividend income will be taxable at 15%, which is a special rate. Whether the domestic company has opted for normal provision or the alternate tax under section 115 BAB or 115 BAA. Whether the domestic company has opted for normal provision or alternate tax under section 115 BAB or 115 BAA. I hope that all of you are clear with this one. Every one of you are clear with this one now. And now, the last but not the least, students, are you aware of it? Foreign company is a shareholder. And say the dividend is received from a domestic company, then in that case what we will say, then no deduction under section 57 is available. Why not available? Because the dividend income is taxable at special rate under section 115A, which is 20%. Can you see that, students? It is just a very comprehensive particular notes that you have copied down, students. This is just a very comprehensive note, students, that you have copied down. I hope that all of you are clear with this one now. Every one of you. Do you have any doubt, students? Please let me know. There will not be any second chance now. All of you are clear? Full clarity? Say, students. So with that now, students, let's proceed further in this context. With that now, students, let's proceed in this context. I hope that every one of you are clear with this one. If that be so, students, if that be so, then in this scenario, students, all of you will ensure now, students, last section is ATM. Now, ATM deduction, students, if you all can see, the ATM deduction, students, that you all can see, this deduction is in respect of certain intercorporate dividend. I think all of you are aware of it. This is the ATM deduction. Now, what if I have taken 115 BAB then? Similar exercise, students. For ATM, similar exercise, deduction under section ATM. Now, this deduction is available only to a domestic company. Isn't it? So, therefore, there is no such particular aspect about discussing about the other part. This deduction of ATM is available only to a domestic company. So, individuals and all is taken out completely from the scene. So, now in this case, the domestic company receiving the dividend, primarily. Now, in this context, students, be careful. Receiving the dividend in this situation from whom, students? It can be a foreign company under section 115 BBD. Under section 115 BBD is the deduction of such dividend is also available. The deduction of such dividend is also available even if even if it is accessible under 115 BBD. And what about the other company? Receiving the dividend from other company? Herein, the deduction is restricted up to point number 1. The deduction is restricted up to point number 1. Such dividend included, such dividend received, and write like this: such dividend received and included in the GTI, which will be compared with. Students, start like this. The deduction is restricted up to lower of what? Such dividend received and included in the GTI. And second is the comparative dividend that the domestic company has distributed a month prior to the due date of filing the ROI. Now, truth, just one very important point, because this is where you get confused. Such dividend received, please include this one, during the previous year. This is the biggest particular notes that we are making it from over here. Such dividend received during the previous year, because many times what the ICI does, I'll tell you through a situation. Don't worry first you have completed or not, just let me know that first. ICI game needs to be unfolded, students, otherwise you will really get into a mess in the examination day. ICI game needs to be exposed. What kind of game that they play on the questions that they draft on dividend taxation. Have you completed this one, students? So the dividend is restricted up to lower of what? Such dividend received during the previous year and included in the GTI, and this would be compared with what, students? The dividend that the domestic company has distributed a month prior to the due date of filing of the ROI. A month prior to the due date of filing of the ROI. So this is precisely how the things has to be looked upon in this context. I hope that I will give you now examples, but before that I hope that all of you have copied down this one. All of you have copied down this one, students, in this context. So if you all have copied on this one, students, thank you, BJ. Now I'll just give you an example, students, just to highlight this particular point. Just to highlight this particular point, I'm just giving you one simple example. Just let's have a look whether you have understood it correctly or not. So what this ICI will do is that, students, let's say for example, the other company is B Limited and the shareholder is A Limited. Okay, shareholder, students, is A Limited. Now in this particular case, students, now B Limited primary, please consider this, please consider this. B Limited, students, in the case of B Limited. Now by the way, I should tell you, before we go further, students, whether ATM deduction, is it available? Is ATM deduction, is it available, students? Please tell me one thing. Whether ATM deduction is available for normal provision? Normal provision plus whether you have opted for 115 BAB plus whether you have opted for 115 BAA. In all the case, students, in all the cases, is this particular provision applicable or not? Please tell me. Is it applicable? All of you will say yes. Every one of you are aware, even in the case of alternate tax regime, even in the case of alternate tax regime, every one of you will say that yes sir, 115 BAB, 115 BAA, even in that situation, the deduction of ATM is available. Perfect. Okay, now consider this. Consider this one, friends. This is such an important stage that you people are in. You are not aware of the importance of this particular thing. So let me give a kind of an example over here. And I will tell you, and this is what ICI has done in various MCQ. When you see on the day of the examination, students, forget it, you can refer any case studies. And it gives a lot of headache on the day of the examination to refer the case studies and the integrated MCQs and all. But all the crux, I'm putting it through this 2 or 3 page, the charts which I'm making for all of you right now. So that this becomes very clear to all of you. So the shareholder company, students, is A Limited. Okay, and say the other company is say B Limited. Okay, now here A Limited, students, be careful, has taken a loan. For investing in the shares of B Limited, and what I have said to you, the deduction under section 57 of interest expenditure is say rupees 20,000. Just a calculation, we have done it instead of doing all that other things. So the amount here, students, as you can see, the amount here, students, that you are receiving it, students, be careful. The dividend amount is rupees 1 lakh. Okay, now for one more last information, students, which is this, that dividend of 1 lakh paid on 20th of March 2022 and dividend amount rupees 30,000 paid on 15th April 2022. We can just write, students, here, paid to whom? Paid to A Limited. Okay, paid to A Limited. Now thereafter, students, here below this, A Limited has distributed dividend to its shareholder up to 30th of September 2022, and the amount, students, is how much is the amount? Are you aware of that, students? The amount is, say, 90,000. This is the best particular case study that you are doing it. The amount is 90,000. Have you all done with this? Now, up till here, I hope that all of you are done. Now, what will happen? The deduction under section 115, deduction under section ATM to A Limited. Students, be careful. First, A Limited has opted for normal provision. Now, the next particular point is that, students, dividend received from B Limited. Students, this is such an important stage. Congratulations to all of you, students. Dividend received from B Limited included in the GTI of A Limited. You tell me now, this is such a googly. Let me see how many of you can answer. Dividend received from B Limited included in the GTI of A Limited. Let me see. Now only the things will get very clear. I'll just write a bit about, students. Let me see how many of you can answer this. Now only we say in Hindi, दूध का दूध and पानी का पानी. Dividend received by A Limited received from B Limited included in the GTI of A Limited. And last is deduction under section ATM. So now tell me one thing, students. In the first case, A Limited has opted for normal provision. You have to tell me, students, how much dividend received from B Limited? How much dividend received from B Limited is included in the GTI of A Limited? How much dividend received from B Limited is included in the GTI of A Limited? Can you tell me this, students? How much is the amount? Can you tell me this one, students? Now please tell me if you are opting for a normal provision. Whether A Limited, in this case, will it be eligible to claim the deduction under section 57? Will it be eligible to claim the deduction of 57? Yes. So it will claim the deduction of 20,000. It will be eligible to claim deduction of 20,000. Okay. Now 20,000 against which dividend income? The two dividend which it has received. First dividend received on 28th of March 2022 and second dividend it has received on 15th of April 2022. So which dividend would be considered? Only the first dividend. Second dividend it has received after the previous year, and that is the reason why, students, you cannot say, but sir, you But sir, we know that up to a month before the due date of filing of the return of income needs to be considered. That has to be considered for the company which is distributing the dividend. For that is assessee company which wants to claim the deduction of ATM. The assessee company which wants to claim the deduction of ATM, we have to see for them how much dividend that it has distributed a month before the due date of filing of the return of income. That is the upper limit. And that needs to be compared with the dividend that it has received during the previous year. Dividend that it has received during the previous year, primarily, and which is included in the GTI. So how much dividend is received during the previous year? 1 lakh. And out of 1 lakh of the dividend received during the previous year, how much is included in the GTI? Out of the dividend that it has received during the previous year, which is rupees 1 lakh, how much is included in the GTI? Definitely you will take the deduction of 20,000 also. Normal provision is there. So 1 lakh minus 20,000, which comes to 80,000 in the first case. Okay, and how much you have distributed, Bijal? The distribution is 90,000. The distribution out to its shareholder up to 30 September is 90,000. So deduction under ATM is 80,000. The reduction of ATM is 80,000, students. 80,000. I hope that all of you are clear with this one. All of you are clear with this one, students. The second particular point which has been there. The second particular point, students, which has been there is what? Be careful. First is the A Limited has opted for normal provision. I have told you. Second one, students, is about what? A Limited has opted for 115BAA. So if A Limited has opted for 115BAA, students, now you tell me how we will proceed further. If A Limited has opted for 115BAA, students, now you tell me, sorry, 115BAB. Let's look upon 115BAB. Now, just now above, in the above chart only we have concluded. That if you have opted for 115BAB, then no deduction will be given. No deduction will be given so far as Section 57 is concerned. No deduction will be given so far as Section 57 is concerned. And therefore, students, in this context, you will not be getting a deduction 57. So, simply put, the dividend which is received from B Limited included in the GTI would be 1 lakh. So, here it will be 1 lakh as no deduction of 57 allowed. Under Section 57 allowed, students. No deduction under Section 57 allowed. And therefore, now how much would be the deduction? In ATM, how much would be the deduction, friends? In the ATM, the deduction would be 1 lakh would be compared with 90,000. 1 lakh would be compared with 90,000. So 90,000 is the amount of deduction. 90,000 would be the amount of deduction. And you will write the balance 10,000, students. The balance rupees 10,000 dividend. At what rate it will be taxable? The balance rupees 10,000 dividend, students. At what rate it will be taxable? It will be taxable at the rate of 25.168%. I am giving you what you people are going to encounter in your examination. Dividend taxation. So balance rupees 10,000 will be taxable at the rate of 25.168%. So this is how it has to be considered over here. That is the second one. And the third one, students, is A Limited has opted for 115BAA. So all the permutation combination. So here is 80,000. There is no restriction in this context. And the deduction also would be of 80,000. The deduction also would be of 80,000. Are you clear with this one, students? All of you are clear with this particular part, students? I hope that every one of you are clear with this one. Any doubt, please let me know. You will not be getting any second chance. Nobody is going to teach you this. Take it from me. This is primarily 2 days hard work that we are consolidated all the case study, and therefore I had to do a one extension. Though the reason why I did that extension was this one. I just needed the time to consolidate everything, and this is what is the net result, which I am giving you in half an hour. It took me 2 days to do all the permutation combination, and this is the net result now. This is the net result now, students, in front of you. Any doubt, please do let me know in that context. Before now, we will proceed. Yes, this is there in the YouTube only. If you have understood this one, students, please do like the video also and share it to all the students, because you also are aware that this would be such an important discussion that we are doing this. So we are done with this one now, students, completely. Every permutation combination, students, just do this chart, 3 chart which I have told you, and your dividend taxation so comprehensively. You don't have to refer now any practicals. You don't have to now refer any practicals in the last one. Don't worry, I have done everything. No practicals, no case studies would be now required to be dealt with it. This is the net result of everything, students. So we are done with this dividend taxation now comprehensively. The next one which has been there, alternate tax regime, also I have considered it now, students. In a way, the beauty of this discussion was that even alternate tax regime, we have ended up doing it. So now let's finish it off the balance point of alternate tax regime, students. The main point of alternate tax regime, we have done it, because this is where the real confusion lies. It's not that otherwise what you do, many students are revising like this, that normal provision revision they are doing of alternate tax regime. Normal provision. Everyone knows it, primarily. Not a big deal. But still we'll now try to conclude even the alternate tax regime. So let's conclude this one about this one, students. Alternate tax regime, students. Let's deal with this one and conclude to this one, students. I'll first take the company, because company is what we have discussed just now. Students, only 2 alternate tax regime you have to consider it, 115BAB and 115BAA. Recent trend of these sections are like this, that the ICI is targeting these sections in the question number 1 itself. That is a total income question. I think all of you are aware of it. The recent trend is like this, that the ICI is targeting this in the total income question itself. I think all of you are aware of this one also, isn't it? So this has become a recent trend. No worries, the difficult part I've already taken out from this. We have discussed in that dividend taxation. The difficult part is already over. So the remaining part, let's start to deal with it. The rate, as you know, students, for 115BAB, students, for 115BAB, there is 3 rates. Always revise like this. For 115BAB, there is a 3 rate. First, you have to see if there is, in the computation of income, as per 115BAB, in the computation of income as per 115BAB, please do check out if there is any special income. Because if there is any special income, then that special income will be charged to tax at the special rate. If there is any special income, then that particular income will be charged to tax at the special rate. We know the special rate now. Now, other than that, now be careful what I'm saying. Be careful what I'm saying. Other than that, the income which is derived from manufacturing, income which is derived from manufacturing, or income which is incidental to the activity of manufacturing, that income will be taxed. The second rate is 17.16%. That income will be taxed at 17.16%. Which income? Again, repeat with me loudly. Apart from the special rate income, if the income which is derived from the manufacturing or the income which is incidental to the manufacturing, that income will be taxed at the rate of 17.16%, which is the rate for 115 BAB, including the surcharge and HEC of 10% and 44% respectively. So the effective rate becomes 17.16, isn't it? Now, students, be careful. This 17.16%, which is the second rate, is to be made applicable. 17.16%, students, is to be made applicable to the two income. Which are those two income? The income which is derived from, and the income which is derived from manufacturing, and the second one is the income which is incidental to the manufacturing. Now, the incidental income, I can give you couple of examples, students. Please, very importantly, take a note of it. And what is that example, students? You should be aware of that. That example, students, is that if supposingly, students, I have furnished a bank guarantee. I have furnished a bank guarantee to obtain the business. And on that bank guarantee deposit, there is an interest income. On that bank guarantee deposit, there is an interest income. Then all of you are aware that there is a judgment of the Delhi High Court in K & Co, which has said that the interest income on the bank deposit, that will be taxable. The interest income on the bank deposit amount will be taxable under the head PGBP, because this is incidental to your business. So therefore, if that is the income which the company has earned, the manufacturing company has earned, and the manufacturing company has opted for 115 BAB, then that interest income, students, please tell me one thing, will that be assessable? Will that be assessable at the rate of 17.16%? Answer is yes, because this is incidental to the manufacturing business. Now, the second example, students, is the export incentives. Students, even the export incentive, students, which are there, are incidental income as well. They are also an incidental income. So if there is an export incentive which is also considered as an incidental income, even that will be assessable at the concessional rate of 17.16%, because that is also an incidental income. Now, if you allow me, students, I will tell you one very important comparative point. These two incidental income are assessable at 17.16%, meaning thereby they are getting the benefit of the concessional rate of 115 BAB, which is 17.16%. The reason is clear that the rate of 17.16% has to be applied on the two income, which is that the income which is derived from the manufacturing business, or the income which is incidental to the manufacturing business. So both these income will be subject to the rate of 115 BAB, and that rate would be, students, at what is the rate, students? Indeed, at 17.16%. But let me give you a parallel over here, students. And the parallel is, if you remember, the profit link deduction. In the profit link deduction, students, while we calculate the qualifying amount of profit on which the deduction will be computed, students, in that, only the profit which is derived from the business, that profit will be subject to subject to the deduction under profit link deduction provisions. So please always keep this comparison in mind, because while we compute the profit, the qualifying amount of profit on which the deduction will be calculated, then the qualifying amount of profit is restricted. The qualifying amount of profit will be restricted, students. Will be restricted only in respect of what, students? Only in respect of the profit which is derived. Whereas here, for 115 BAB, the rate of 17.16% will be applied on two incomes. And which is the two income? The income which is derived from manufacturing business and the income which is incidental to the manufacturing business. In both the cases, the profit, the income will be subject to the rate of 17.16%. The income will be subject to the rate of 17.16%. So this is my second rate. The second rate in 115BAB. So what was the first rate? I told you there are three rates. So the first rate happens to be the rate of the special rate of tax if in the total income computed as per 115BAB, if there is any special income, then that special income will be taxed at the special rate. Then the second category is the income which is derived from manufacturing business or the income which is incidental to the manufacturing business. On that the rate of 17.16% will be applied. And the third case, students, happens to be, what is the third case, students? The third case is neither the first nor the second. Neither first nor the second. So other income. So the third case is known as other income. Just now we have referred that example of dividend taxation. So a dividend income received by this company which is opted for 115BAB, if it has received a dividend income, then that dividend income, students, will be taxable without any deduction at the rate of 25.168%. We have just now referred that example, isn't it? So that will be taxable at the rate of 25.168%. So the other income other than 1 and 2 will be taxed at 25.168%. without any deduction. But when you talk about 115BAA students, there are only two rates. When you talk about 115BAA students, there are only two rates. Which are those two rates? So in 115BAA students, you have to see if there is any special income which is taxable at a special rate. So in the total income computed as per 115BAA, in the total income computed as per 115BAA, is there any special income? Is there any special income, students? Is there any special income which is taxed at the special rate? Is there any special income which is taxed at the special rate? If that is the case, then that income will be taxed at the special rate. And the balance total income, including the other income, the balance total income including the other income will be taxed at the rate of 25.168%. Will be taxed at the rate of 25.168%. Will there be a deduction of the expenditure? Yes, subject to the prohibition which is given in this section. But there is no restriction otherwise as far as the deduction of the expenditure is concerned. So always compare it like this: 115BAB 3 rates and 115BAA 2 rates. In 115BAB for the other income, the third category of the rate, for other income, the rate which is not, what is other income? Which is not covered in 1 and 2 above. Then the other income will be taxed at 25.168% and without any deduction of the expenditure. Keep this particular point in mind. Thereafter, students, rest of it, students, I think all of you are aware. Conditions, I think every one of you are aware of this one. This manufacturing business. Now, only one point, students, as far as the manufacturing business is concerned, the important point to be considered over here is this, that manufacturing excludes something over here. Are you aware of that, students? The term manufacturing, students, has certain exclusion in this case. So this is the exclusion which has been given to us. The business of manufacture or production of any article or thing shall not include the business of development of computer software in any form of media, mining, conversion of marble block, or similar item of slab, bottling, gas, cylinder. Printing of books also is excluded, students, or production of cinema films. Printing of books or even the production of cinema films, these are considered as a case of the exclusions. These are considered as a case of the exclusion, students. So accordingly, students, in this context, these are considered as a case of the exclusion. So it shall not include the following. So that is the exclusions which are being given over here, and that exactly how the things has to be looked upon. I hope that all of you are clear with this. All of you are clear with this one, students. So these are the exclusion, students, which are being there. Now be careful. This exclusion is only restricted to 115 BAB. This is only for 115 BAB. Please don't stretch it to the additional depreciation, because many students are having the habit, like supposingly if a company is in the printing of books, okay, and it has not opted for 115 BAB. It has not opted for 115 BAB, and the company is in printing of books, and during the previous year it has purchased a new plant and machinery. In the new plant and machinery, students, so will it be eligible for an additional depreciation under section 32(1)(2)(a)? Will it be eligible for additional depreciation under section 32(1)(2)(a)? Why not? Answer is yes. It will be eligible for additional depreciation under section 32(1)(2)(a). So the additional depreciation, students, under section 32(1)(2)(a) is available in this regard, because this exclusion of manufacturing is only for the purpose of 115 BAB. Apart from that, students, the condition, I think I will not run through it, because every one of you are aware of it, because this, what kind of, it should be set up and registered on or after 1st October 2019. Everyone, you can just run through this. Now, obviously, students, whether it is 115 BAB or 115 BAA, they need to forego some big deductions. Even that list is known to you, which are the big deductions which needs to be foregone. However, only point that needs to be considered over here is this too. Over here is this too. Otherwise, rest of it, all of you are aware of it, students, in this context. So these two are the important points which needs to be considered. Students, be careful of this one. So in this context, students, be very careful of this one. Students, if that company, say for example, is a manufacturing company and it has opted for 115 BAB, and that company has incurred revenue expenditure on scientific research and the capital expenditure on scientific research during the previous year. That company has incurred a revenue expenditure on scientific research and a capital expenditure on scientific research. Then, in respect of those revenue and the capital expenditure on the scientific research, will they be eligible for deduction? Will they be eligible for a deduction? To that, the answer is yes. Because, please, can you see this one here? So, what is excluded means 3511 and 30, which is revenue expenditure, and 3514, which is the capital expenditure. These two are excluded in the negative list, from the negative list. If these two are excluded from the negative list, it implies that the deduction for revenue expenditure on scientific research and the deduction for the capital expenditure on scientific research is very much allowed. The second one, just now we have discussed, ATJJAA and ATM deduction, is that also allowed? And the answer is yes. ATJJAA and ATM, is that deduction also allowed? And the answer is yes. Students, be very careful. This they have targeted once. This point number 3. These people have targeted it once in one of the question. Students, the additional depreciation definitely is not allowed. We all are aware. The additional depreciations are not allowed if you have opted for 115 BAB or you have opted for 115 BAA, as the case may be. You will not be getting the additional depreciation for sure. And the normal rate of depreciation, students, is at 40%. And the normal rate of depreciation also cannot exceed beyond 40%. Why we are focusing on that 40%, students? Because, say for example, students, I am a company and I have opted for 115 BAA. I am a company and I have opted for 115 BAA. And there is a block of 45% of a motor vehicle. Students, remember, there is a block of 45% for a motor vehicle. That motor vehicle which I have purchased, this was a period, if you all remember that, of 2019, 23rd August 2019 to 31st of March 2020. During this period, I have purchased the motor vehicle and I have put to use during the same period. So, any particular motor vehicle which I purchased during the period of 23rd of August 2019 to 31st of March 2020, and it has been put to use during the same period, what is the rate of depreciation for such motor vehicle? A normal case. It is, students, in this context, it can go to 15 plus 15. In this context, they can also go to 45%. If it is like a company, like for example, it's an Ola company or a company which is engaged in the running of these things. The company which is engaged in running of the goods or the passenger transport. So for these companies, the rate of depreciation can go to 45%. But if you have opted for the alternate tax regime, then in that case the maximum rate of depreciation, the normal rate of depreciation also cannot go beyond 40%. Just keep that in mind. In one of the attempts they have targeted, wherein they have given that for one of the block the rate is 45%. So what you have to say, that if you have opted for 115BAB or 115BAA, then the normal rate of depreciation also will not exceed beyond 40%. Will not exceed beyond 40%. So that is a special point that you should keep in mind. And the last point, students, is this, that students, see, for 115BAB there is no issue. In the very first year of the incorporation of the company, students, you need to take a call, and the call has to be this, that the company needs to decide whether it wants to, in the very first year of the incorporation of the company needs to decide whether it wants to go for 115BAB or it has to go with the normal provision. So that is what it is, and there is no second chance. Be careful, students. There is no second chance on this. The very first year they need to in fact take a call on that. Now this is a very peculiar thing. Why this is important? Because see, for 115BAB company, in the very first year itself they need to take a call. Whereas for 115, if a company who wants to go with 115BAA, there is no compulsion. There is no compulsion. At any given point of time, it can opt in for 115BAA. But yes, that is for sure, that once you have opt in to 115BAA, then there cannot be opt out. Once you have opt in for 115BAA, then there cannot be an opt out. Is that clear to all of you? This is what it is for 115BAA. For 115BAB also same thing. Once you have opt in the first year, you have decided that you will go with 115BAB, then you cannot opt out. Why this is important? Because we will discuss for individual what is the situation for opting in and opting out. We'll be discussing for individual what is the situation for opting in and opting out. So students, what can happen? Say for example, I am an existing company and I have so far has availed normal provision, and I have so far availed the normal provision. So students, there is a lot of MAT credit which is available. There is a lot of MAT credit which is available. Now one thing is for sure, once you opt for 115BAA, the company will not be subject to MAT. The company will not be subject to MAT. Same is also for 115BAB. If you have opted for 115BAB, then the company is not subject to a MAT. So therefore, there will not be any question of MAT credit, isn't it? So if supposedly if I am an existing company and up till now I have opted for a normal provision and therefore I have got a lot of MAT credit at my disposal, I should be looking for utilizing my MAT credit against my normal income. I should be looking for utilizing my MAT credit against the normal tax. So I should not opt for 115BAA till the time I have utilized my MAT credit. I should not be opting for 115BAA till the time I have utilized my MAT credit. That is as a principle, I should be very clear on this. And the second one, students, would be that once the MAT credit has been exhausted, thereafter it should be, then I can opt for 115BAA. That is possible. This is the first special point. There is one more special point which is about the brought forward losses. Now students, supposedly I am an existing company and I have got a brought forward losses and the unabsorbed depreciation, and in that brought forward losses and in that unabsorbed depreciation, there lies or there is the element of that portion of loss or that portion of unabsorbed depreciation which in the option of 115BAA or the option of 115BAA, this is considered as a negative item. Meaning thereby, say for example students, there is an additional depreciation which is remaining unabsorbed. Or for that matter students, I have taken a deduction students of, say for example, of donation to national laboratory, for which I have taken a deduction of section 35. Now, when I opt for 115BAB or I opt for 115BAA, then that donation then I don't get deduction of that donation. So therefore, in my earlier years, when I have given the donation for national laboratory, I took a deduction when I was opting for the normal provision. And because I never had sufficient profit in that year, that deduction of section 35 in respect of donation to national laboratory, that deduction remained unabsorbed and it is forming a part of my business loss, the business loss which I have brought forward. Now, if that business loss which I have brought forward in the current year, I am opting for 115BAA, I am opting for 115BAA, then the portion of business loss which represents the block deduction, the portion of business loss which represents the block deduction, that portion will get lapsed. So on the brought forward business loss and the UAD will not constitute the portion of block deductions which remain unabsorbed in the earlier year. So that much portion will get lapsed once you opt for 115BAA. Once you opt for 115BAA. Obviously, we will not say about 115BAB because in 115BAB in the very first year itself, this option needs to be taken. In 115BAB in the very first year, this option needs to be taken. I hope that all of you are clear with this one. And the last special point is this one, students. Be careful on this part, students. In fact, I should revise this thing. There are 4 special rate. There are 4 special rate for 115BAB. There are 4 special rate for 115BAB, students. So the rates which are there for, in fact, please make this particular part. This is such an important stage that you are in. The rates which are being there. Rates for so if you have opted for 115BAB, or you have opted for 115BAA. The first is the special income. The special income at special rate. The second one, students, is income derived from manufacturing or incidental to manufacturing. Income which is derived from manufacturing or incidental to manufacturing. So this income, students, derived from manufacturing or incidental to manufacturing, students, this income would be at 17.16%. Now here, students, right here, plus 10% surcharge plus 4% HEC. Because that loading is obvious, always has to be there. Third one, students. The third one, students, is about other income other than 1 and 2. No deduction. Of any expenditure. And the fourth rate, students, just before, let's hold on, students. The fourth income is income in the bracket, right, more than ordinary arising to the company from a transaction with person having close connection. The rate is from, just a second, rate is so you can write here such excess profit will be taxable at the rate of 34 point. What is the rate? 34.32. And for 115 BAA students, special income at special rate plus 10% surcharge plus 4% HEC. And the second one, students, the balance total income would be at this is the difference. Friends, do like the video and do share this video. This is such an important particular session that is there in this context. Clear with this one now, friends? So there are 4 rates for 115 BAB and then there are 2 rates, students, for this particular context. Is that clear to all of you, students? So now on the day of the examination, what is that other that you are going to revise, students? So apart from the rate, students, you will revise herein that particular case of revision, students, the deduction two big deduction allowed. Which are those 2 big deduction allowed? 3511, 3514, and the second one is 80JJAA and ATM. Apart from this, friends, what else you need to revise? Revise about the MAT credit for 115 BAA. And the last thing to be revised is the brought forward business loss and UAD deduction for 115 BAA. This 2 additional concepts what I just now discussed. So MAT credit, what I have told you, students, MAT credit for, I will say, MAT credit for existing companies. For existing company, what is the way forward? What is the way forward? And the brought forward business loss and UAD deduction when the company opts for 115 BAA. This is the revision point. Your alternate tax regime is over. Congratulations, students. Congratulations. So this is the other revision point. This is the other revision point, students. This is the other revision point. Other revision point. This is the other revision point. If you all are through with this one, students, this covers your alternate tax regime for the company. Congratulations, students. Again, I'm repeating the same thing. With that now, students, if you all are through with this, one, students, we now come towards, for individual students, primary, which has been there over here. I've already discussed this particular part. Only thing, students, I just need to discuss. Others are clear over here. Students, tell me one thing for individual. In fact, this, if you remember, I have discussed this particular point when I was doing house property revision. At that stage, I have discussed this particular point. The point when I was doing the house property revision video, students. Say, for example, students, if I'm an individual, and from individual, I've got a LOP unit. There are two LOP units. Please be careful. I'm an individual, and I've opted for 115 BAC. I'm an individual, and I've opted for 115 BAC. Now, I've got LOP1 and LOP2. Now, in LOP1, there is a loss of 3 lakhs. LOP2, students, there is a profit of 2 lakhs. Is this set off allowed? Is this set off allowed, students? Many students are asking, sir, how come there would be a loss? Why not? Interest deduction, is it allowed or not? Students? Answer is yes. So, interest deduction will be allowed, students, in this regard. So, since interest deduction is allowed, so that way there could be a loss. And for an LOP unit or DLOP unit, the deduction of interest expenditure is unlimited. For the LOP unit or a DLOP unit, the deduction of interest expenditure is unlimited. And that is the reason why, students, there could be a loss in this of this magnitude of 3 lakhs. But is this, first of all, if it is an LOP unit, is the interest deduction is allowed? Answer is yes. If it is an SOP unit, students, and I have opted for the alternate tax regime of 115 BAC, then in that particular case, whether the interest deduction will it be allowed? No. The interest deduction will not be allowed. So there will not be any question of deduction of the interest expenditure in this case. SOP unit, yes, it is allowed. LOP unit, yes, it is allowed. SOP unit, no, it is not allowed. So as far as 115 BAC is concerned, students, it effectively will become a case for the case for SOP income would be nil. LOP or DLOP unit, there would be an amount. And if from the LOP and DLOP, if the net result is negative, like in my case, the net result is negative 1 lakh. The net result, why I am using the word net result? Because if the deduction is allowed for interest expenditure, and after deduction, I will do an intra-head set off. And after that, if my net result is negative, therefore this point number 2 will come into play. And what the point number 2 says, that if you have opted for 115 BAC, then this particular 1 lakh will get lapsed. Students, can I get a standard deduction? If I have taken a house property, will I be getting a standard deduction? Answer is yes. The standard deduction of section 24, 30% of the NAV, will it be allowed? Answer is yes. But what if in the case of salary, standard deduction of 50,000, is that allowed? No. Standard deduction of 50,000, is it allowed? Answer is no. So therefore, here if you see standard deduction of 50,000 is not allowed. And for IFOS, the standard deduction for family pension, which is 1/3 or rupees 15,000, whichever is lower, 1/3 of the family pension amount or rupees 15,000, whichever is lower, that standard deduction is not allowed. if you have opted for 115 BAC. That standard deduction is not allowed if you have opted for 115 BAC. Rest of it point, students, are the same. Here in chapter 6A, students, here in chapter 6A, where the individual has opted for 115 BAC, they will be getting 80JJAA deduction, yes. What about ATM? ATM is only for a company, so therefore individual cannot take ATM deduction. So 80JJAA deduction, they will get it. Apart from 80JJAA deduction, students, whatever is the employer contribution to the NPS for which they get the additional deduction under 80CCD subsection 2, whatever is the employer contribution in 80, not their own contribution is in 80C, but the employer contribution is governed in 80CCD subsection 2, that employer contribution, that 50,000 amount extra, that will be eligible for deduction even if I have opted for 115 BAC. Even if I have opted for 115 BAC. So this is the special point only to be considered. Apart from that, students, rest of the things are same. Rest of the things are same as we have discussed in the case of company. The block deductions and all. Now, the other particular point. Is about one. Just hold on, students. Other particular point. Before I do other particular point, let me tell you one important thing. Students, 115 BAB and 115 BAA is applicable only in the case of a domestic company. 115 BAB and 115 BAA is applicable only in respect of a domestic company. Whereas 115 BAC, is it applicable for any company? 115 BAC, is it applicable for resident and non-resident individual? 115 BAC, is it applicable for a resident and a non-resident individual? To that the answer is yes. To that the answer is yes, students. So it is applicable in this regard, students, to both. In this regard, students, so just be very careful on this particular point. Just be very careful on this particular point. I hope that every one of you students are clear with this one. Clear with this one, students, and that exactly is the point. So students, this is how the things has to be looked upon in this context. This is how it has to be looked upon, students, in this context. So with this now, students, we will proceed further in this context. So NR individual or a resident individual, NR individual or a resident individual, both of them, students, will be eligible for this particular benefit of 115 BAC. Both of them will be applicable for the benefit of 115 BAC. Now the tax rate, students, the slab rate, I think all of you are aware of it. Every 2.5 lakhs, the slab rate is increasing by 5%. Up to 2.5 lakhs, nothing. Now, every 2.5 lakhs. Now, students, if you are a senior citizen, then these are the tricky points. These are tricky points, students. If you are a senior citizen and you have opted for 115 BAC, will your slab, will it increase? Will your slab, students, will it increase, students? Answer is no. Your slab will not be increasing to 3 lakhs. Don't consider that now your slab will increase to 3 lakhs. Nothing of that sort is going to happen. Once you have opted for 115 BAC, your slab will remain the same. Okay. Resident or non-resident, the slab will remain the same. One beauty of this one is that if you are a resident, student, and you have opted for 115 BAC, then in this case, you will be eligible for a rebate of 87A. Then in this case, you will be eligible for a rebate of 87A, students. That is what it is in this context. Just keep that in mind. Huh? So if you are a rebate, you will be getting the rebate of section, students, 115. You will be getting the rebate of 87A, and I think all of you are aware of what that rebate is the same case. Now, if there is any special income, if in the total income which the individual has computed as per 115 BAC, if there is any, students, those who have just joined in, I will just tell you one thing. We have done a very important discussion of the dividend taxation with a lot of important case study, which you find it in the MCQ and the integrated case study. I have made 4 slides after the discussion. You will have to refer that. And one alternate tax regime for the company also, I have done very important discussion just before that. So just do ensure after the lecture gets over, do go through the same. Very important. And do like the video also and share with all of your friends. Without failure, students, this is such an important session that we are in right now. So students, in this context, if you all see over here, what I was talking, if the total income computed by the individual under 115 BAC, if that total income students has any special income which is charged to tax at a special rate of tax, any special income which is charged to tax at a special rate of tax, then in that particular case, whether that particular special income chargeable to a special rate of tax, students, will be chargeable even if it is opted for 115 BAC. Yes, the way we have discussed for the alternate tax regime for the company, same will happen over here also. And the balance total income will be taxed at the slab rate which has been given it above here. So that is what it is. We have discussed this. Other points also now we have discussed. Last point, students, in the case of individual taxation is this one. Last point. This is the point. Students, just we have discussed as to how the opt-in will work. Opt-in will work for 115 BAB. How the opt-in will work for 115 BAA. We have discussed that. One thing is very clear, that there is no opt-out. There is no opt-out from 115 BAB or 115 BAA. So once you have opted in, there is no opt-out provision from 115 BAB or 115 BAA. But in the case of individual students, there is a peculiar situation that arises. And please have a look to what is this peculiar position. Students, here, if supposingly the individual who is there, he does not have any business income. If the individual who is there, he does not have a business income, then in that case, every year, students, it will have the option of opt-in and opt-out. Means they will decide every year whether they want to go for 115 BAC or the normal provision. Every year they will have this particular provision applicable. Whereas if the individual has got a business income, then they will have opt-out. Once they have opted in for 115 BAC, they will have once in their lifetime the option to opt out. So only once they can opt out, students, in this case. Please understand, 115 BAB and 115 BAA, once you opt in, there can never be an opt out. But for individual students, when they have got a business income, then once they have opted in for 115 BAC, once in their lifetime they can opt out. This exactly is the point, students. And one question is there in the chart. If you all want to go through the same, please do the same. And that is what alternate tax regime is all about. We have revised this particular point with all the key particular features, students. And the next particular session which I am going to have with all of you in the chart revision. Now, students, we are at the end of our chart revision also. So next session I will do math with all of you. And the request from the students is all the capital gains front also. I'll deal with that as well. And we will close our chart sessions once and for all. Okay, but this session is one of the most important session. I will tell you, friends, just go through them. Those who have just joined in, for all of them, I've done a very important discussion on the dividend taxation, specifically that 57 ATM and various permutation combination which are covered by the ICI in their MCQ and the integrated case study. Everything I have covered it over here. So that is what, students, it is in this context. And the alternate tax regime, various situation, permutation, combination, we have considered everything, students. So do go through them without fail. That is my humble suggestion to all of you, those who have just joined in for this particular lecture. Absolutely important particular area so far as your examinations are concerned. Students, very quickly, I'll tell you about this particular part. Students, our subscription plan for the iconic subscription, students, as you all are aware, this is a plus. First, the plus subscription, students. The plus subscription, which you can all see, is a subscription plan which we have got it, wherein, students, do ensure to tell to all your friends, those who have got their attempt due in November 2022. Now, even there is a 3-month subscription. So do ensure that if they have got one subject left pending, they can do it from this particular platform itself. Or 6-month subscription or a 1-year subscription, as the case may be, which you all can see over here. Depending upon if their attempt is November 22 or May 23, November 23. But one point that they will tell to you should be telling to them is that in the referral code, you have to put the code CADS so that they can get the discount of 10% outright. Iconic subscription is one of the flagship program, students, for the Unacademy, wherein the students are being given the textbooks and all. Students are also being provided with the other facility, like there is a mentor which is provided for the students. Round the clock doubt solving facilities are being provided. So these are the features which are there for the Iconic program, which is there in the Unacademy. And for that, students, 12 months, 24 and 36 month subscription plan is given. Again, the same thing, students. When they do it, they will do it primarily, as I told you, referral code has been given. Referral code of CADS is what you need to put up to get a 10% discount. Even in the Iconic, it is applicable, students. The code CADS works even in the Iconic. Now, students, you can see the kind of the pricing also. It's so economical, because if you see 28,500 for the entire group with the host of feature, including test series. There is a graded test series program, 40, 60 and 100. So with that kind of a feature also, primarily at this pricing, students, you can just imagine, students, the kind of the leverage our students can get it from this platform. So this is one of the point. Iconic is what, students, combo is also there. Combo facility is also there. If they have to opt for both the group, students, the same can be facilitated by opting for the same. The pricing definitely is a bit higher. Obviously, there it has to be. But the combo subscription plan are also there for both Iconic as well as Plus subscription. So students, with this, students, I'm concluding the today's session. Those who have just joined in, again, I'm repeating this point. You need to watch this video without fail, specifically the dividend taxation and alternate tax regime. The dividend taxation, wherein I've covered everything about 57 ATM, everything about 57 ATM. Students, all the case studies of the ICI and integrated MCQs, everything has been covered it from this particular class itself. So do it without fail.